What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I'm the People's Champ of Wall Street, the bearded boy wonder, Dave Bartosiak. And today, my friends, we're going to try this again for the second time. I'm just going to start by apologizing for everything. Because our stream is just terrible. It's just terrible. Stream not working out so well. I got to have a tech come in, hopefully fix some things. So we're going to limp into this. What I mean by that is we've dropped the bit rate here. Going to try and get through this. But if there's buffering, I apologize. That's just kind of the hand that we're dealt today. So hopefully it's not too bad. And, it gets out and you guys can see. But if there's buffering, again, I'm sorry. It just is what it is, my friends. It is what it is. So let's go ahead and just dig in here on Ulta. I'm just gonna do, if you guys don't mind, I'm gonna do sort of the bare minimum and keep focused on the task at hand. Normally we're going off on tangents, talking about other things. I'd probably address Bitcoin, talk a little bit more about Workday, all these things. Just can't do it today because this madness that's happening. This is also going to affect tomorrow's show on Ambarella because the text says he's coming between 10 and noon, so we're probably going to have to back that up a little bit. Yeah, we're going to get freezing, guys. It's going to happen. Going to get some buffering. I'm sorry. We're just going to have to fight through it. I promise you it will be better soon. Okay? All right, so now that that's out of the way, let's go ahead and get elbow deep here in the Ulta. Dave's Daily Dive, what's today? Today's Wednesday, so no. I do those Dave's Daily Dives on Thursday. I know it's a misnomer. It's called Daily Dive. Why don't I do a Daily Dive? Well, I've thought about it, to be honest with you. I've considered it, but there's just a lot. We could have, Kurt, we could have like a Discord Q&A. Like an open Q&A where I give some people some mics. They open their mics up and we start talking. And, Dr. Paul wants me to go back to Sunny Isles. I can't do it, Dr. Paul. Can't do it. The lady friend, she's got a nice little quick commute to work. I actually drive her to work every day, and then I pick her up, which is cool because I get a chance to drive my car, so I do like that. And it's only 3/4 of a mile away, so it gets me out. There's all sorts of madness. Fidelity was down, and this is a weird day today. It's a very strange day in the neighborhood. And again, there's so much I do want to talk about, but I'm gonna focus here on Ulta because I don't know. We could spend the whole day. We could spend the whole entire day talking about what's happening in Bitcoin and all this other stuff. But I want to talk about Ulta, and since I've already had you guys on the hook for the better part of 45 minutes with this madness happening earlier and with my stream going down, and this stream still is garbage too. I just want to kind of get my point across. No, a girlfriend. She's a girlfriend. Yeah. Okay. Let's talk about it. Let's. Black line corresponds with the right y-axis, which is price. Green arrows, earnings beats. Red arrows, earnings misses. The multicolored lines represent the evolution of our Zach's consensus over time. Can you guys see what I see? If I just took out the stock chart here, the actual price going up and down, and we only looked at EPS, you wouldn't expect this stock to be down the way it is. Right? When I see a dramatic shift in the stock price like we've seen here, that to me spells estimates coming down. estimates haven't come down. In fact, if you're looking at the current year for Ulta, estimates have increased since the stock has come down. Big question mark right there, right? Why? So we're going to have to look at some things today. We're definitely going to look at the PE, which you guys are going to note for sure there's going to be contraction in the multiple. Forward PE, we're definitely going to have contraction in the multiple. But so maybe there's a question on this E, right? Is the growth still going to be there? Is it sustainable? Is Amazon coming to eat their lunch? You guys remember what happened around here, right? Amazon bought Whole Foods, and then it was, oh, forget it. They're going to get in retail, and they're really going to start taking a bite out of everybody, Ulta included. So we're going to try and figure out what this E is. What's the story? And then, of course, we're going to look at the price to sales, because maybe that's telling us something. Maybe the revenues are starting to take a little bit of hit, or there's been a slowing of revenue growth that could possibly justify what we're seeing. What we are going to see is a big fib. I've already done the big fib from here to here, and you're going to see some very interesting things. So that's why I was so excited about this Ulta show and so frustrated about our stupidity trying to get this thing started before. And I do apologize for that. I should have been doing this a long time as far as trying to fix this stupid cable situation. But, I do a few things. My friends. Sometimes, I just don't check all the boxes. Today was certainly one of those days, so I apologize. Let's look at the detailed estimates page. Try and figure out, what is this? Because right now, I'm going to tell you, this is a screaming opportunity here. But look what happened in the last quarter, right? Despite a beat, you only got a little bit of a run-up. And I know that because we were bullish on it. We caught a little bit of it, and then it gave up. So what's the deal with Ulta? Got to figure out what's going on here. Let's look at the detailed estimates page. Zach's ranked number 3, so basically we're not going to get anybody doing anything, is what that tells me. They report after the bell tomorrow, so got the rest of the day today, figure out what we want to do. Top 33% of our Zach's industry rank. I don't really care so much about that. Jim, I like where your head's at with this Macy's and Dillard's, right? We're going to go back to that. Sales, 18.72% for the current quarter. That's the growth number that we're looking at. Next year, 21.5%. So there's an acceleration on the revenue side for next quarter. Not next year. I said next year. Next quarter. Current year number 20.88. Next year is when it starts to slow a bit. So maybe they're looking out next year. I don't know. Let's look at the EPS side and see what this tells us. 18% EPS growth for the current quarter. 26 for next quarter. Of course, you can see it if I don't cross it out. 26. Current year looks like 28. Next year slows. Now, if you guys notice this, 128. So the fiscal year for them is going to end after this next quarter. So we've got a little bit of time. So the market's going to be fixated on this number, and it's going to be fixated on this number. Not so much concerned with this number yet. So I think you got a 1 quarter. You got a reprieve. Women's war paint. That's one way to put it. Bondo. That's what I like to call it. Over the course of the next week, last week rather, you do have an analyst increasing their estimate for the current quarter, next quarter, current year, and next year. I never saw Elf. I know. It's weird. I need to watch Elf. And let me tell you, I got a new TV. I got a Black Friday deal. I didn't go crazy. Typically, it's the man that wants to get the huge TV and the woman that's like, reel it in. Complete opposite. My girlfriend wanted me to sell my car, cash in my Bitcoin, sell my stocks, mortgage my future to buy the biggest TV on earth. And I was like, nah, man. The 55 inches were under $400. The 65 inches were about $65. Wait. The 65 inches were $800. There we go. My numbers are all jumbling together. And then it got exponentially more expensive from there. So originally I just want to do the 55. We don't have a large living room. It's not that big, but we got the 65. So why am I talking about TVs? Because I've been watching in 4K Netflix and Amazon stuff, and it's spectacular. It's a lot of fun, and it hooks into my computer too, so then I can play games in 4K. Wunderbar, man. Let me tell you. EPS $1.66. You've been stagnant on $1.66. Next quarter 282 to 283. Current year 836, 837, 836. Next year 982, 981, 982. So these numbers are relatively stagnant. Nobody's coming out here and really making moves. Not pushing it one way or the other. Recently, somebody's come in and dropped a penny. Look at the surprises. They've been small surprises, but surprises nonetheless. So that's all good. These are all good things. Whoops, these are all good things. All good things. All right, let's start to get in the nitty gritty here. That's not the industry you want. Get this industry. So while I got your attention, I know pretty much all of you are, but if you're watching this later, I don't know how you'd be watching it later. Actually, maybe I shouldn't even do it. Whatever. If you're not hooked up on our email distribution list, livetrader@zax.com, shoot me those emails. And of course, come kick it with us in the chat. Tons of fun. We've got bots. Revenues. Very nice revenue growth. 20, 20, 20, 20, 20, 20, 20, 20. 14! That's right. Revenue growth is going to slow next year. So could they be selling already in anticipation of that? I don't know. Look at this, though, my friends. You see the growth this quarter, but look at next quarter. They are really pricing in some spectacular moves. And that's what's up here. That's what's up. Yeah, it's going to buffer a little bit, Trevor. I'm sorry. Tomorrow the tech's coming. What is going on here? So it's going to be a big number in this next quarter. Remember, we're always looking forward. But with that stock coming down, well, that's not the stock chart, but that's what it did. With the stock coming down, why? 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 Let's look at the EPS side of things. What happened? Still looking for 28.2% EPS growth. Solid quarter-over-quarter number. Look at this next quarter. Yo, this next quarter is supposed to be colossal. And you know they're going to be looking towards next quarter, right? Eyes on the prize and down the road. We've started to see a little bit of a resurgence in retail. A few of these names. I added a name today, a retail name in Surprise Trader. Valuation, forward 12 PE. Where you at here, Ulta? A little bit of a concern here. 22 times. So not as bad as when it was 40, right? And even earlier this year, before it really sold off, it was 36. So the last time Ulta was trading at a multiple where it is now was 2014. Now, it was still rich relative to the rest of its peers. 22 times earnings. So the rest of its peers, I'm not too concerned with these peers. Let's look at the overall market. What are we about, 18? Almost 19 now on the S&P 500. So while valuations have been swelling on the S&P 500, the overall market, Ulta's been giving some of that back. Despite 30% EPS growth for this year. That's a big number. Very big number. What has this done on earnings? Well, we know last time we had the spike up and then it came crashing down. Remember, guys, 2 days before and 2 days after earnings. That's what this test says. Last quarter, overall, it ended up being a drop. Quarter before, a move, stick it, move it, stick it, nothing. 2s, 10s, all over the place, I guess, is the moral of the story here. Does it drift? Can it drift? You get some choppiness in Ulta following the reports sometimes. A little, ugh. Recently, it's just been gross. I mean, that's... Because remember, the head fake and the drop. There was a drop and a head of something. Was it overnight it was up? I remember there was a whole lot of shaking going on either way you slice it. And then here you get just the plummet, the death. Like we're not, like everybody hates Ulta now. Let's look at the stock chart. So, as promised, I got your big fib. So this is a Feb lows. February 2016 to the June highs. And look at where some of these support levels have been. Now remember, once you draw this fib, anything to the right of this, these lines were there before the stock got there, okay? Notice a little consolidation above that 38.2, and then it breaks. Finds support at the 50, spikes up, then it breaks. Finds support right near the 61.8, gets up, starts to get sandwiched here under the 50, then it breaks. Finds support right about the 76.4. Let me tell you, that's the last floor. After that, it's the full retrace. And now it's hovering about that as the 50-day comes into play. Ulta's been trading below its 200-day moving average since July. I've always said, you better have a darn good reason for a stock trading underneath its 200-day moving average in this market. Now, I'm sure there's a bear case to be made for Ulta. It's still trading 22 times earnings. Maybe, and that's a little rich compared to their peers, although you could probably say their peers don't really fit the same profile. Certainly not the same growth profile as you see in Ulta, but still. So I suppose that's the bear case, that, hey, they can't keep growing. Same-store sales growing the way they've been growing. You can only sell so much makeup and hair dryers, and, you know, it's just, no, like, people, no, forget it. You're done. Sephora is eventually going to start chewing India. You know, it's over, right? That's the bear case. I'm sure there's other bear cases, but that's certainly one of them. Now, from a technical perspective, you have to like that the stock is trying to fight above this 50-day. Because what does this look like in a different world? In a more bearish world, the stock gets close to the 50-day and sells off, or the stock touches the 50-day and sells off. This is indicative of a reversal that's starting to take place here at the 50-day. Still plenty of upside resistance with the 200-day here up at 255. So this stock could go all the way up here and still be in a bearish trend. But you have to like the support, and it's starting to step up a little bit and getting its head up above the 61.8. Next stop, the 50. So what level is this? There's levels to this, man. 230. 230. 187. Probably 200 is a psychological level that would hold. And if you look at the volume here, big spike here, big spike here. So I'm thinking that these guys fought. The Bulls have already won the battle over the hump here. look at this commodity channel index trying to strengthen. Now here's one more thing. We got a little gap here, so this is gonna throw us off a little. Let's add our shaken money flow. Now remember, this does throw us off, but it's not a big gap, so I'm not gonna totally throw out what's happening. But no doubt, you're starting to see the slow build in these money flows. Slow build in the money flow. That's a good thing. That's a good thing. Now, so from a technical perspective, I'm saying oversold. It's at the 50-day, but it's above the 50-day, so that's a good thing. But remember, these earnings reports, you can throw your chart out the window if you're at a support level, because there's plenty of liquidity, and it could be more than enough liquidity to break that level. So just keep these 230s in mind as overhead resistance. Let's look at the options chain here on. I feel like this is they play music like this in Ulta, don't they? I don't know. It's been a long time since I went to Ulta. Haven't really been using the beard oil because I don't have to go into work every day, you know. So no use in spending all that beard oil on this glorious mane of mine if nobody's going to be able to behold it aside from my girlfriend and the dog, or the guy at the gas station, or whatever. Oh man, Kurt. Oh, I saw that. I see what you're doing there. All right, so these guys are going to report tomorrow after the bell. Let's look at this front week to get an idea of what the market is pricing in here. Where's Ulta at? 221. So these 220s, look at how expensive. This can't be right. Something's going on here. Come on, bar chart. I'll give you one more again. Give it a shot. Give me the good stuff. Give me proper quotes. No, you're not going to give me any proper quotes. What's happening here? Where is Ulta? Or is Ulta 220? No, 222. 222, that's why. Okay. Here we go. All right, this is better. My bad. 222.50. All right. There we go. That's perfect. Perfect. Little bit wide, of course. It's Ulta. 8 by 940. Let's call it 870. At the money put, 8 by 990. So we're going to call this 895. So they're looking for almost 18 bucks out of Ulta. Just about 8%. So $18 or 8%. $18 to the upside. Puts you right about there. To the downside, puts us, what, in here somewhere? So on the in-betweener, we'll just call it this. You can smush them a little bit, right? Smush, smush, we're good. Really 1750, right? So that's what we're going to do. So this is sort of the realm that we're playing in. Now remember, 230 was where that partial upside resistance was. And the support was even further down. It was 180 something, whatever, all the way over there. Okay? So this is going to present us with a couple of different opportunities. All right, a couple different scenarios. Let me get out of here. Let's go to the monthly expiration. Drop it from the side by side to the stacked. Get a few more deets. Okay. Now, there's a lot of things that you can do with this because there's so much juice. The juice is loose, my friends. We're going to do show all. This is going to take a little bit to load up. We're the debit folks and we're the credit folks. That's what I want to see. Debit versus credit. Hey, that's why that Discord is cool, because I could post those quick straw polls, and you guys can tell me real time what you want. All right, so Ulta. Now, you're going to be tempted to look at some of these credit spreads out of the money. Yeah, I hear you, Dr. Paul. I just want to show you something. Not necessarily you, but just people in general. So one strategy that we've used before is you go out of the money a little bit further than what you think the market is pricing in. And then you sell a call spread out of the money. And you sell a put spread out of the money, so you can do that. Iron condor, as we were talking about earlier. So this is if you're bearish on Ulta, one thing that you can do is you can sell this out of the money spread. Now, you're going to see that the bang for your buck on this isn't all that spectacular. What do I mean is you're going to be risking a lot of money when you're not going to be able to make that much money. But it's only a 2-week trade, and all you need is Ulta to stay at or below 240 at expiration. So in this case, you sell the 240 call for 380. Simultaneously, you're going to buy the 245 call for 293. So your net credit on this is going to be 87 cents. Now the difference in the strike prices is $5 minus that 87 cents means you've got $413 at risk. So wait, I can only make $87, but I got to risk $413 to do so? Yeah, that's the case. So that's why you're typically only rewarded with about 20% on these. And we've seen this, right? You make about 20% of your money. It's out of the money. It doesn't sit well with everyone, okay? Some people like to get paid a little bit more for that kind of risk, right? Which is totally understandable. And you can decrease your risk of losing by going further out, but then you drop how much money you're getting, right? I mean, so for example, you can move this all the way out to 265, 270, and you're only going to get 30 cents of net credit, and you're going to have 470 at risk. But you can do that if you want. And you make 6% on your money. Doesn't sound like, you know, a very palpable, or a very palatable, rather, move, right? That's why we don't do that kind of stuff in here. We don't really talk about this. Now, what about getting more aggressive? Let's say you're in this stock and you think, you know what? These guys have got a black eye for a fight that they weren't in, and I don't know why they're getting beat up so much. Now, we said 230 was that upside, because that's where that first level of resistance is. Maybe it does every bit of that. So one way to participate in that is to buy the 220s and sell the 230s, okay? And again, the market's pricing in $17 to the upside. 17, almost 18. So that puts us, oh wait, I want to do this 220, 250. That's right, that's where we were. So one option's with the 230s, the other's with the 240s. But look how expensive it gets out in the 240s, okay? Now when we're doing these, I try and keep these trades like $200, right? So the 220, 250, it's 1040. So that's how much it's going to cost you to go long that call. Simultaneously selling the 240, you're going to get back 380 of that, but you still have $660 at risk. It's a lot of money. Difference in the strike prices here, it's going to be $17.50 minus that 660 means you can make 1,000 on that 660, or 165%. You would need Ulta to close at or above 240 at expiration. That's way out there. But we already know from a technical perspective that there's some overhead resistance here at 230. So maybe you want to catch every bit of that. So if you went long the 220, 250, it's still going to cost you 1040. But here, rather than selling the 240 all the way out of the money over there, you just sell the 230. So this way you're going to get back a lot more. You're going to get back a 7. So in this case, the net outlay is 340. Now, granted, your upside potential is less. It's only 750 minus the 340, which is 410, 340. Hey, Ron, how you doing, man? So in this case, you can make 120%. Now, I always put this on the chart here to gain some perspective. So you get 120% from the move from here to here, but you're only going to get another, what was it, 40-something% for the rest of the 10 bucks? Is it worth it not to trade it that way? No, I don't believe. Now, here's another one. If you don't want to spend $700 on this, you can pinch it in. So what I mean by that is you go a little bit out of the money on your long end, because you still need this thing to rally anyway, right? If you're being aggressive. And you can keep this end of the trade, or you can even pinch this in further too. So you could be the sandwich in here. You can go long the 225 for 920 and then sell the 227.50 for 805. So here your net outlay is only going to be 115. Difference in the strike price is 250 minus that 115 is 135. Divided by that 115 means you can make 117% on this, and the stock doesn't have to move as much. Doesn't have to move all the way to 230. You're going to max out just if it goes to 227.50. So here's an idea, I believe, for doubles. So a bull debit long November, not November, we're in December 15th, 225, 227.50 call spread for 115 net debit. Debity, according to the chat. So you got a lot of upside potential. You don't need the stock to run all the way up and through and go crazy. Now, the more bullish you get, basically the more out of the money you get with this. And you can keep scooching on down if you want, right? And that's what will happen. So go back to the chart. And, you know, we're looking at 230 here. Why is this saying this? This is just off? Is that what's happening? I'm going to go ahead and reload this, I think. Give this free stockcharts.com a chance. There we go. Okay, good, better. It updated. And that creepy music, do you guys remember I set an alert? Set an alert a long time ago. What? Oh, not you. Okay, so, and again, I was talking about before, stock above 50-day moving average. These are all good things. So the 230 is there. You got to believe that a decent report at least gets there. And then 250 is the next target. Why am I saying 250s? That's for the lotto, guys. We're going to get back to that a little bit later when I get it together here. Bears. Are there bears? Are there any? Are there bears out among you? Are there bears here? Because I think bears have to say, you know, absolutely 210 all day, no problem. Kyle, the music is only downloading, so I'm not uploading music, so that's not that shouldn't be the case, because my downloads are having no problems. You know what I mean? But I can shut the music off and we can see. Let's do it. You know, it shouldn't be an issue. But there's a lot of things that shouldn't be issues. So we'll see. I'll give it a little bit of quiet time here. But like I said, it's an upload. It's an upstream issue. It's not a downstream issue. So I don't think the music's going to make a lick of difference. And early on, so far here, it's not. But we'll see. I'll give you a little bit of quiet time. But frankly, it's boring just sitting here talking to myself. I need some music. Bears. So still use this 222.50. And I was talking about 210, right? But how many of these bears out there are going to want to spend, you know, $500 on being a bear, right? Just don't like it. So again, I think if you're bearish You got to do the thing where you pinch it in a little bit. And we can pinch it in. So even a 220. Let me clear this up. So yeah, Kyle, no change to the no change. I'm still getting flashing whatever here. Back to the music. So pinch it in at 220. You can even go to 217 if you wanted. And I know that 210 sounds like a very aggressive point. Even if you did the halvesy to the 215. Do the math on this, and maybe it gives you a favorable risk versus reward for the bears. Bears is going to cost you $9.10 to do the 220. Simultaneously selling that 215, you're going to get back $6.95 of that. So the net outlay is only $215. Difference in the strike price is $5 minus that 215 means that you can make $285 on 215, good for 132%. And if I'm a bear, I am very happy with that. And again, you can get even more aggressive if you want to push a little further down the line. You can do a 217, 212, 50 even. But still, just giving you bears some ideas. Bear, debit, long, November. Not November! December 15th, 220, 215 put spread for, I've already forgotten how much it was. 215. There could be bears out there. There should be bears out there. But I'm not one of them. I'm on the bullish side of this because of this. This huge growth that's still there. And them getting beat up because Amazon bought Whole Foods or whatever the heck the reason is. It still hasn't translated to the EPS side of things. And next quarter, you're supposed to have a spectacular quarter on revenues and EPS. So, do I want to pay 40 times earnings for it? Forward earnings? No. But will I pay 22? Yeah, I think so. So, I think the trade that pays is the bull. Trade that pays, bull, debit. And I think you got to be a little aggressive here. And I think you could get rewarded. And that's just going out a couple of weeks, which is very short. The good news about this is they trade weeklies. So we're going to have an opportunity on Friday morning to see what the report was. And then we could even buy, we can fade a move with next week's contract or whatever it is. And for the real antsy people out there who want to say, well, what if I just moved it up? Here, I want to show you what happens moving up. So keeping the strikes constant of this 225, 227.50. So, sorry. 225, 227.50. And you're going to notice something here. And this is going to point out, for the newbies, you're going to learn a little something. So the 225 call is going to cost you 245, simultaneously selling the 227.50. You're going to get back 630. Looky here, my friends. That 115 is exactly what you'd be paying for the December 15th spread. So why not just go with the December 15th, right? So what's happening here, what's happening is the amount of money that you're paying for the extra time for the December 15th, that time value, you're getting all that time value by selling 227.50. 225 is going to cost you $11.80. Now selling the 230, you're going to get back $9.55. So net outlay on this is $225. Difference in strike price is $5 minus that $225. $275 on $225. Can make 122%. Very similar to the return that you could expect in the December. It's just going to take you a lot longer to do it. So don't ever shy away from a call spread because it's too far out. It's fine. It's fine going that far out because Don't worry about paying for the time value on one end of things because you're going to sell the time value on the other end, okay? So don't worry about it. And that's actually a good way to kind of start wading in the water here because you're not gonna lose all the money that you put in. Now here's the other thing about this, guys, is the reason that I do these up front, up close kind of things and give you examples that are going to blow up immediately. It just gets you to the decision point quicker. I don't, like, I understand that these trades can blow up immediately and be worthless, right? To me, you do your risk management before you get into this. So when you put this trade on and say $115, as far as I'm concerned, that $115 is gone. That's my potential most downside that I could lose on this trade is at 115. I don't need that 115. I don't care. Other people come in here, well, not you guys here, but I've gotten flack for, oh, this could potentially all go, and why are you trading like this, and what are you doing? You're nuts. I'm managing my risk. Yes, there is a chance I can lose 100% of my $115, but my $115 is not 100% of my trading account, right? It's only a small thing. So I don't need to go out to, a 6-month out expiration, and then in the case of me losing my money, I'm only going to lose, 10 or 15 or 20% of my original investment. I don't care about that. I've already managed my risk by only risking $115 on this side of the trade. Okay? Many ways to manage risk, and we do it with options, and it works. I know, diatribe, right? Whatever, I go on rants. You should know this by now. Lottos, yes, very rich. Because you got to spend $200 to get all the way out to the 240s. If you want to do a lotto, you got to do a spread out of the money, okay? So what I mean by that is you do a 240, 240, 250. And remember, lottos, guys, for those of you who may or may not be here, are just that, lotto tickets. Instead of spending $50 and buying a scratch off, you spend $50 and buy an out of the money call or an out of the money call spread. I really just do this for fun. No one should ever do this with money that they expect to see back. It's 100% gambling. You're lighting money on fire. But if you did the 240, 240, 250 call spread, 235 is what that 240 is going to cost you. 238 rather. And then the 240, 250, you're going to get back 208. So it's only 30 cents here. Difference in the strike price is 250 minus that 30. You can make 220 on 30. Pretty good there. Pretty solid. But you need Ulta to close at or above 240, 250 at expiration, which is way out there. So I say if you're going to mess around with any lotto stuff, just save it for tomorrow. All right, guys, somebody's knocking at my door. I got to get out of here. You guys got everything. I'll talk to you tomorrow. Thanks.